We have this article coming out of Cointelegraph.com with some information and some quotes from the New York Stock Exchange chairman, and he's voicing regrets for not launching Bitcoin futures trading first. And I have to say, this is super surprising. I almost wonder, again, if they intentionally didn't do it first, but it seems as if the New York Stock Exchange is really super involved in Bitcoin and blockchain technology since 2011. The New York Stock Exchange owns the digital currency group, it owns CoinDesk, it owns Grayscale, it owns the XBTC, it owns the Ethereum Classic, ETC. I mean, indirectly, the New York Stock Exchange and the digital currency group own a ton of businesses in the Bitcoin and blockchain industry. And so with as much foresight and as much connection as they have, I'm surprised that they're not leading the way in every single aspect of the future. But maybe again that's by design, and we just can't be sure if they intentionally didn't want to be first, or if they're just saying that they feel silly, right? Maybe they just wanted someone else to walk into the dragon's den first, and then they can learn from their mistakes, as the New York Stock Exchange and a lot of these different companies are really building up. The number of patents they have, and the amount of people that they have in the space, the different systems that they're developing, the processes that they're developing and implementing to support the people and the systems. It's this entire infrastructure of operations that these companies are creating, and the New York Stock Exchange is really leading the space in terms of being the bridge between the traditional financial world and this new Bitcoin and blockchain technology world. So he said that he and his exchange were fools for letting their competitors beat them to the launch of the Bitcoin futures trading. And so the New York Stock Exchange rivals have been launching these Bitcoin futures trading, and as some of you guys out there are aware and are interested in the future stuff and how it's affecting Bitcoin, we have the Chicago Board Options Exchange, the CBOE, and we also have the Chicago Mercantile Exchange, the CME group, and there's both scheduled to launch in December, and in fact the CBOE beat the CME to the punch. So the CBOE actually introduced its offerings December 10th, yesterday, and the first full day of trading is actually Monday, December 11th, which is right now while we're shooting this video. And so meanwhile, the CME group is scheduled to launch their Bitcoin futures on December 18th. So mark your calendars, December 18th, we're talking 1 week from today. The CME group is going to be launching their Bitcoin futures product, their financial instrument that they're going to be offering through their exchange. And so it's going to be two different exchanges offering these Bitcoin futures trading. And so again, a lot of people are just talking about the volatility and how the volatility is tied to uncertainty, but the volatility and uncertainty is how traders and a lot of these financial institutions make a lot of money. These developments show that Bitcoin and other digital currencies are slowly but surely entering the mainstream financial sector. The balance of the financial power is gradually shifting, exponentially gradually shifting, away from the historic institutionalized environment, and it's now shifting to a decentralized and much more equal system. And so rules and regulations will try to stifle the equalization of the decentralized systems, but that's not going to be in the best interests of the regulatory systems, of the regional systems that the regulators are governing over. Again, if there's too much regulation involved with the Bitcoin, involved with cryptocurrency, then that's going to push away innovation. It's going to push away adoption. It's going to push away the ability for that area to flourish with these tokens and with this technology, as the value of these tokens and the technology accelerates into the future. In the future, I would imagine that these regions, these governments, these regional institutions are going to recognize that they want to encourage Bitcoin. They want to encourage cryptocurrency and blockchain technology, blockchain adoption, blockchain integration between the different businesses, the different payment systems, the different companies at a B2B level, the different consumers with the B2C level, because the more this technology, which is going to be rapidly increasing in value, the more of it that is distributed to your specific region of the world, the stronger your region of the world is going to be in terms of its wealth, in terms of its potential, in terms of its opportunity, in terms of people's knowledge, awareness to be able to use and adopt this technology, just like being aware of Facebook and how Facebook works and Snapchat and how Snapchat works. Businesses need to recognize that there are multi-million numbers of people's attention and minutes focused inside that platform. And people's attention is a currency. People's focus is a currency. And if people understand how these currencies work, they're going to be able to use these currencies more efficiently. It's going to create more innovation. It's going to create more business. It's going to, just make these regions of the world stronger. And so just the exact opposite, I would predict, would be true, that if these regions are pushing away these tokens and this technology, then these regions are going to suffer. And so that's where the shift is happening. And nowhere is this shift more prominently displayed than it is with the traditional financial institutions, which are charging forward with these new financial instruments, which is just bringing more awareness, more attention, and putting more capital into the space. So over here at Reuters.com, we have this one headline where they're talking about the hotly anticipated Bitcoin futures, how they ease off after a 22% surge. And so they said there was an initial surge of almost 22%, trade up to 13% on Monday in the eagerly awaited U.S. market debut that backers hope will confer the greater legitimacy of the volatile cryptocurrency, which is going to lead us to wider usage, wider adoption, wider awareness, as I was talking about just a moment ago. So the CBOE, as we mentioned before, marked the first time that investors could get exposure to the Bitcoin market via the mainstream regulated cryptos. That happened today. And the premium so far, according to this article from Reuters, says that they've been high. And this is demonstrating that few people actually want to take the short side of the trade. Go figure, right? So that's interesting to know that few people want to take the short side of the trade, which means that few people probably want to lose money because everyone is expecting the value of Bitcoin to go up pretty rapidly. And so further in this article, this is saying at this article at Reuters that in just over 12 hours after launch, there's been 2,780 contracts that have been traded, meaning around $48.5 million vested. So this compares with a daily volume of $20 billion across all cryptocurrencies. And so this is, it's less than a drop in a bucket. To say that this was a drop in a bucket would be too kind to the things that are to come. The initial trading with the past 12 hours with 2,700 contracts, $48 million is nothing, right? $20 billion trading across all different cryptocurrencies. Let's go check where we are. Yeah, $21 billion traded, which is relatively high in the historical context of the cryptocurrency trading. But 20 billion across all cryptocurrencies is nothing. One of these hedge fund managers wants to make one trade that's just $20 billion. One hedge fund manager wants to make one trade that's $200 billion. So for the total to be $48 million is just nothing. $20 billion to a lot of these guys is still nothing. And so they're just setting up the systems that are going to be existing in the future, because this number is going to be going up. As the volatility increases, as the value of Bitcoin increases, it's just going to be more opportunity for those percentages for people to make little bits of money here and there, and for larger operations to hedge their bets. So according to this article, there's some quotes in here that say it's going to take time for the derivative volumes to build up. But eventually, if they prove to be a significant percentage of global trade, then they should, in theory, help to stabilize things. And so people are expecting that the futures markets are going to help control Bitcoin. They're expecting the futures markets are going to help stabilize Bitcoin if the futures markets prove to be a significant percentage of the global trade. And so this is your clue. If the percentage of global trade is high inside the Bitcoin futures, then that's going to give the Bitcoin futures more potential to control or to manipulate the price of Bitcoin and to create opportunities and profits with the price of Bitcoin. And so Charlie Lee is helping us understand Bitcoin futures a little bit. Oh, I thought this was interesting. So fiat is to gold as Lightning Network is to Bitcoin. And what Charlie Lee is saying about this is that fiat was effectively layer 2 solution for scaling gold. It was lighter, it was easier to use. They were able to add some fraud protection in there. And it was backed, you know, the fiat, it was backed and settled in gold until that backing was later removed and we came off the gold standard. So unlike fiat, Lightning Network settlement to Bitcoin, according to Charlie Lee, is cryptographically secure and cannot be removed. So the layer 2 of Lightning Network is never going to be able to be manipulated or altered away from the main Bitcoin blockchain. And so apparently developers, what we're hearing is that this Lightning Network is going to protect people inside these Lightning networks. And so that hopefully people can't get lost or imprisoned in some of these second layer protocols that, you know, in some cases could potentially be operating with unique rules inside their own little ecosystems. Back to the futures talk. Charlie Lee has some experience with futures. And so he says to help us understand about these futures derivatives is that for those not familiar with futures, XBT settles in 2 days. And so again, we were talking about this. This isn't buying and selling and trading Bitcoin on a moment-by-moment basis like a lot of people are in the exchanges and Bologniacs and Bittrex. It's not trading in the moment. It's a future date. You're saying in 2 days from now, I'm predicting that the price is going to be such and such. And so for those not familiar with the futures, XBT settles in 2 days before the third Friday of the month. So January 2018 futures is going to settle on the January 17th, 2018 at the Gemini auction price. And so what this means is that if you're long XBT and you think that Bitcoin is going to be higher, it's going to be more valuable in the future than it is right now, then you're betting that the Gemini BTC price is going to be greater than $16,800 on January 1st or January 17th, 2018. And so that's what that means. So that's where you're betting in the future. You're betting if the price is going to be higher or lower than a given price. And then you're betting so much that you really believe or really think that the higher price is going to happen. And so what we were seeing from the Reuters article is that a lot of people are betting that the future price is going to be higher than $16,800 in the future. And there's very few who are betting that the price is going to be lower. And so if by some chance they're right, if the price on January 17th is less, you know, if you short Bitcoin, if you're shorting it, what that means is that you think the future price of Bitcoin is going to be less than that price that they say. This brings us over to what we're talking about with the future, what we're talking about with Metcalfe's law. And there's this post on Reddit saying 99% of all the people in the world are still not in the game, and it's greater than that. I believe it's 99.9, maybe 99.99% of the world they're still not in the game. And we're going to hit 3%, you know, we're going to hit 1%, we're going to hit 3%, we're going to hit 5, 6. And then in a few years from now, who knows what that penetration level is going to be at. But being so early in the game, there being so much money in the world, we talked about how much money there is in the world in earlier videos. You can go check those out. But as this additional money starts coming into the space, people are going to look at these times and just recognize, you know, at $16,000 compared to $100,000, how cheap Bitcoin really was. Look into that and look into those numbers and to recognize, you know, what is the upward trajectory? What is the ceiling? What is the limit that Bitcoin could potentially reach. And so let's see what this post says. This says, at a time when some experts are warning that the Bitcoin bubble is going to collapse at any second, we have Ronnie Moas of Standpoint Research that said there's plenty of room for cryptocurrency to keep rising, and he's still buying. And so, again, we just keep on hearing this story over and over again. A lot of people say that there's a bubble. A lot of people say it's going to burst. We keep on seeing these short corrections, and we see these short corrections followed by people immediately buying up what was sold, just taking money from the person who is selling high, who's getting scared, who has a weak hand. In terms of the total number of people using Bitcoin and blockchain technology, there's this post on Reddit, and there's this archive page where people were talking about the Arab world getting into Bitcoin. We haven't seen a lot of news come out of the Arab world outside of all of the innovations that are happening in Dubai specifically. But in Saudi Arabia, the most prominent newspaper is listing the Bitcoin prices among gold and crude oil at the top of the economy page. And so that's a huge number of people in the world with a significant amount of resources, let alone gold and capital, dollars, oil, all sorts of assets and money that they're now recognizing the value and probably learning about the future potential of the Bitcoin and blockchain technology. There's this one comment that was posted here that said that clerics are letting people know that trading crypto is completely fine according to Islam. And so it's just really interesting. I guess I haven't thought about religious leaders talking about Bitcoin and, and having that sort of level of encouragement of people hearing about it at Sunday church. So, yeah, I suppose if anyone hears about this at Sunday church, let us know. Public service announcement, just to help you guys understand what's out there. If you want to be playing with some of the websites, interacting with some of the websites in the world, it's good to have MetaMask installed. If you go to your Chrome browser and you can go to your Chrome extensions and you can type in MetaMask right up here, and MetaMask should pop up. You want to make sure that it says metamask.io, https, : metamask.io. There was a time when there were a couple of these. There's a plugin pretending to be MetaMask. There were two of them, and one of them was a knockoff of the other one. So you want to be really careful if you do see two different MetaMask options that you just want to add just the one. You want to make sure you're adding the right one to your website or to your browser. I guess relating Bitcoin to money, a lot of people think, or a lot of people say the old axiom that money is the root to all evil. And I really question that. I really don't think personally, I don't subscribe to the idea or the belief or the affirmation that it's true. I think that money is the, energy. I think that money is energy, money is intent, money is just extending, you as a human being toward what it is that, your desire is in the world. And so money can't be the root to all evil when money is being used for so many good things in the world, when money is being used for making so many good things happen all around us. And so I think it's a huge disservice to money. I think it's a huge disservice to yourself and to your family when you think about money and one hand you say it's the root to all evil, and then the other hand you try to say that you would like to have a lot of it. And so I think it's important to recognize that money is an extension of who you are. Money is an extension of all the good things or bad things that can happen based on how you see the world and what you want to happen to the world. But if you see money as something that's bad or evil or dangerous, then energetically, subconsciously, if you will, you're pushing away money, you're pushing away wealth, you're pushing away the potential for you to obtain, your dreams, because you're saying that the thing that you want, the thing that you need, is something that you are, placing as like a vile sort of concept, a vile sort of thing. So why would money flow into you? Why would money flow into your life if you have all of these negative thoughts and opinions and feelings about money? And so I think the same thing could be said about, Bitcoin, and if Bitcoin, was nefarious, or if money was nefarious. I mean, the US dollar hasn't been serving everybody really well, but that's the monetary policy behind the money. It isn't the money itself. And so I think it's important to recognize, the smoke and mirrors. I think it's important to recognize, things that are happening behind the curtain. And it's really difficult for us to tune into what's happening behind the curtain because we don't see the curtain. The curtain's invisible. There's not actually a curtain there for us to be aware of, right? It's not so obvious as it was in The Wizard of Oz. So this is Rule 11 for Monopoly. So the Rule 11 is, what if the bank runs out of money? So, and this is exactly how the Federal Reserve Bank works. And so originally the game Monopoly, go check it out on Wikipedia. I don't want to get all into it, but the game Monopoly was a socialist game to teach people about the risks of 100% extreme capitalism. There's definitely benefits to capitalism, just like there's benefits to socialism. But Rule 11 in Monopoly is that, what if the bank runs out of money? So some players think that the bank is bankrupt, that it runs out of money. But the bank never goes bankrupt. To continue playing, you simply use slips of paper to keep track of each player's balance and their banking transactions. You just have a centralized ledger that the bank controls. And you just keep these notes on just normal pieces of paper until the bank has enough money to operate again. The banker, this is an interesting note, the banker may also issue new money on slips of ordinary paper that isn't actually money at all. It's just pieces of paper that says it's money. And so the bank in the game of Monopoly can do that, and the bank in the game of life can also do that. So yeah, feel free to check us out on Patreon. We're patreon.com/mintingcoins. We're really looking to grow to 500 patrons, and really looking to expand our operations to really connect with more people and give more people this information about Bitcoin and blockchain technology. This has been a lot of fun experimenting with the live shows and trying to figure out how we're going to incorporate the live shows into our day-to-day.